Okay. All right. So, just to start, the first thing that I think I've said this a little bit, but I want to dive a little bit deeper into it. And this is before really we get into any index or individual names or anything like that. I did a stream on Friday night where we were just looking mostly at charts. So, this weekly prep won't necessarily be individual names unless you guys got some more that you want to look at. We could do that at the end. But if you do want to just see what we were looking at the other night, you can go and watch that stream. It's on X and YouTube, and it's also in the 2026 lives and tab on Discord. So you can watch those there if you want to. But one thing that I haven't been bringing up as much, and maybe I haven't dove into it as much as I should have, but one thing that I think is really important right now, because I bet you if we took a poll throughout the group right now, I would say probably like 90% of people would probably say that the price action has been pretty bad right now, and I think that's fair. I totally agree. I would be in that 90% for sure. Um, but now, just because it's poor, right? This doesn't mean that this should be a time where you don't necessarily, kind of stay in your rhythm. So what I mean by this is, when I used to coach baseball, I used to coach baseball for, I had a 16-year-old team and an 18-year-old team. And, the 16s were trying to get looked at for college. And for the most part, the 18-year-old kids were trying to, find some playing time, right? And, one thing that I would always say to them, because I had a lot of friends go through this when I was playing myself, is that, um, you know, you go into a place and your expectation obviously is to play, right? So I'm going to try and equate this to the market as much as possible. But now think about it, right? You're active in the marketplace, you're interested in trading, you're interested in looking at stocks to buy or options to trade, whatever you might be. But there is a chance as an 18-year-old freshman going into college, whichever level it might be, that you get there and it's just not your time yet, right? Maybe you're not there physically, maybe your ability is just not there yet, maybe you're more of a developmental project or something like that, right? Maybe it takes a little bit more time for you. Um, but what I would try and tell these kids, because again, I saw a lot of my friends. My school when I was younger, like it was always like a baseball powerhouse, always one of the best teams in the state, all of this stuff, and we had a lot of guys go play college sports, whether it was baseball, basketball, football, whatever it might be. But um, but one thing that I noticed, because for me, luckily, I was able to go in as a freshman. The first 4 games, I got no playing time, and the first thing that was going through my head was, I need to get the fuck out of here. I played really well up into getting into college, and now I'm going to a school where I should be dominating, like I should be playing every game, and I'm not getting an opportunity. Like, I need to get the fuck out of here. Luckily, I was able to, next game, got some playing time, and I was good. And that was it. I played every game the rest of the 4 years that I was there. Really 5, because I did the grad year. I got hurt my second year, so I got a redshirt. But that's besides the point. But you might be in an opportunity or a situation where you don't get that opportunity right away, right? And one thing that I would always try and tell these kids is that, look, yes, I know you have high expectations going into this, and you're really expecting to, see action. You're expecting to be playing, right? Or in terms of the market, you're expecting, clean, perfect delivery, right? But that's not always going to be the case. But just because you're not getting that opportunity at that moment, you don't want to squander your time, right? In this, at least we got all the time in the world, right? Well, when you're a college athlete, you got 4 years, right? You don't want to burn that year. You're already on the bench. Don't burn that in terms of your development or your progress and your ability to, get better in that allotted period of time, because you still can, right? Now, it might not be in terms of execution, right? Where you might not have too many opportunities to execute because price is not meeting your model's demands, right? It's not fitting into the criteria for my setup, but I am hands off. But that doesn't mean that you can't use that time effectively still, whether that's you watching price action throughout the day. Maybe you're picking up on some tendencies from a 5-minute, 15-minute, maybe an hourly, 4-hour, right? You're starting to see things develop more. So really the big takeaway for all this that I'm talking about right now is that although price action really hasn't been efficient by any means, go back and historically test this. It'll come back around. It always does. Historically, it always has. But you don't want to be in a position where you're kind of just wasting your time right now, and you're burning, key developmental, points in your trading career. Right early on, you're trying to build up on something, just because the market sucks right now and you're not really actively mashing buttons, or you could still get better at this from just sitting and watching, maybe being able to start identifying high probability conditions versus low probability conditions. All of these things come into play. And again, as poorly as the market has been delivering recently, I don't think that this is like, all right, I'm just gonna kind of go through the motions here and not keep the pedal to the metal, because I know everybody wants to do this at an accelerated pace. You want to get good at it, and you want to get good at it quick. You can't really squander time if that's the case, right? I understand, look, I got a full-time job. I don't have much time at nights. I can't even make the lives for some time, so I watch these back in the morning on my way to work. Totally understand that. That's fine, right? You're still doing something, but just note, like, the scale, or the time horizon for you to get to where you want to be might be a little longer, and that's okay. But just take that into consideration, where, look, just because this sucks doesn't mean that this time can't be used wisely, right? This might not be the focus of execution per se, right? You might not be trading because, again, things aren't meeting the criteria for you, but you could still use this time to grow and get better. And however that might be, whether that's back testing, maybe you catch up on some old videos of concepts. Maybe you just start tracking stuff on your own. Maybe you start noting what your feelings are, how you feel in terms of your read. Okay, I'm totally lost right now. I'm not reading it well. The last couple of days, it's just kind of been a blender. But then you could zoom out and say, okay, well, while my lower time frame analysis was pretty bad right now, my higher time frame analysis is still good, right? Our draw, where I think price is going, is perfectly fine. It's just not doing it at the pace that I want it to. Why is that? Then you can go back and check. Oh, well, I see that we're really not forming imbalances on really any time frame right now. It's kind of just a mess. And then you could start to see that for yourself when you note that, okay, we're not forming any imbalances. This is not really something that I want to be a part of. That's progress. That's you growing. That's you getting better. That's you identifying times where there's higher probability conditions versus lower. All of those things will come into play very shortly here, because I don't anticipate this taking forever, this poor delivery. It's already been since the end of November at this point, right? That last week were Thanksgiving. Since then, it's really been pretty bad, since that point. But I don't anticipate this being forever. So, any little bit of an edge that you can gain from this week period of time, you could really use to your advantage as you move forward here. So I just think that's totally something you don't really want to overlook. Again, it sucks, but it is a part of it. Last year we saw something similarly in quarter one as well. It wasn't as efficient, and then throughout the rest of the year, it was like it was a party. It felt like every week there was a really nice move or moves that you can go back and really learn from in a different capacity, whereas more so, the execution component of it. Right now, it seems as though the focus really here has been being a little bit more patient and really, relying on what your trade setup or trade model is, so that you aren't, kind of putting yourself in a position where you're trading low probability slop. So, but all right, that's just the beginning. I just wanted to do a little bit of that because, I don't want I don't want anybody to squander time. If you got time, and I know it stinks, but you could also just be focusing on other things right now that are going to help you get to whatever the goal you have just a little bit faster. All right. So that's just the little lead off thing that I was thinking about, and I wanted to talk a little bit more about. But okay, let's talk about indices. All right. So NASDAQ, from a monthly perspective, you'll notice, again, I really should start on the quarterly, but you have a quarterly imbalance here, 23,904. Okay, that's ultimately where I do think we are drawing towards. Monthly, again, that little swing low 23,904. So your lower time, or I'm sorry, your internal range liquidity here would put you into that quarterly bullish imbalance. Now the quarterly is in premium, I understand that, but again, not the end of the world. Untouched quarterly imbalances don't typically get melted in one shot. Historically, I'm not sure really if there ever has been one, to be honest with you. I go back and look and I see, like, at the very least, you're going to get some sort of reaction out of that quarterly, whether it's short term or long term. But hold on, somebody's mic is off. I want to just make sure it's muted. Oh, whoops. Yeah, all right, we're good. All right, so breaking down to a weekly. Weekly, you're really not getting any additional insights here either, right? So if you're looking here, you'll notice we have relative equal lows on the weekly. You have a little bit of a sliver of a volume imbalance here, nothing too crazy. We did gap down to start this week, so yet again, another volume imbalance, and this is really all we've been working with here for, I don't know, how many weeks has this been? Since like mid-November. It's literally just been volume imbalances. We haven't formed a weekly fair value up to the downside or anything like that. So in the short term, I mean, is this really helpful in terms of our higher time frame bias? Like, I don't think so. I think this is a little bit of confirmation of bearish order flow, to be honest with you. Like, I'm fully in the camp that we're going to go see 23,904. But with that being said, I think there is a benefit to going down in the way that we are, because by not creating imbalances to the downside, this is very controlled. So sometimes you see on like 5 or 15-minute, price runs where we don't form any imbalances, and that kind of sets us up for later for a pretty explosive move. I would not be surprised if we see something like that. Now, of course, once we, eventually get to this 23,904, sorry. When we get to that 23,904, we're going to have to show some willingness to go higher. But when we do get that willingness, or an imbalance to the upside, right? Whether you're looking from a 4-hour perspective, an hourly perspective, a daily, whatever it might be. But from that point, you look from a higher time frame perspective and you realize that we really don't have many bearish levels overhead. That's why I am holding on to hope that, beyond that 23,904, I think that's probably going to be it for the year. Now, obviously I can be wrong, but I do feel good about that. And it's mainly because we aren't really forming too many bearish levels here from the higher time frame perspective. So ideally, get 23,904. From that point, we could start to make our move higher. There won't be many higher time frame imbalances in the way. Hopefully we can move smoothly and kind of resume business as usual. So dropping down to a daily. So believe it or not, the close on Friday actually was pretty important, and I think Stonks noted it. He was talking about how we closed the day on Friday, and so far literally perfect in terms of us sweeping buy side liquidity, ultimately still respecting this bearish daily imbalance, but also gapping down back into the imbalance and rejecting the way that we have thus far in the overnight session. We have a ton of relative equal lows, and we do not have any daily imbalances left. I don't think there's a 4-hour either. We'll get to that in a second. But to me right now, seeing these relative equal lows, 24,239 would complete the bearish Mando model from your daily perspective all the way back to the high of the run, February 2nd, down to your low of February 5th. You had your discount retracement. Now, prior to that next flush, there may have been SMT here. I kind of forget. Let me just see real quick. Hold on. So the 16th, let's see. No SMT. Nope. But nonetheless, relative equal lows. No imbalances left. Then beyond 24,151, we're now 200 points away from that quarterly imbalance. And at that point, now we're talking. So even on this decline, right? Let's just say we do put our foot in the ground here, reject, and start to make progress to complete the model. Ideally, if we create an imbalance, we get into it the next day and then reject it again. I want this to be as smooth as possible moving forward. And what I mean by that is I really just want us to not have many imbalances overhead so that I think we can move pretty swiftly following that. That would be ideal in my book, uh, because ultimately I'm looking at things from the higher time frame. I'm also looking at things from the smaller time frame, but specifically with the higher time frame, we still haven't even formed a monthly bearish imbalance to the downside. So by us not forming that, I'm not looking for that prolonged period of downside. Now, of course, I can be wrong. Let's say we shit the bed February and we get a continuation move into March. Then you're going to create a monthly imbalance. I understand that. But I think that's really unlikely just based on what you see on the smaller time frames, like a daily or a weekly, where you're not creating imbalances, you know? So, but, overall, again, 23,904 to me. I know it's been a drag. It's been really annoying to get to that point, but ultimately, I think that's where we're going. It's the higher time frame draw has been smooth. I had a tweet a while ago. I should pull it up, but it was basically all those because I was putting really exaggerated claims on the tweet, and then in the video was obviously like a much more realistic approach, but it was in the same direction. Like this here, I had like the stock market is going to crash the first week of November. Like obviously that's like super hyperbolic, but yeah, that was the beginning of the descent, right? And for each one of those candles, it turned out like the corresponding video that I had posted had been accurate. So again, it's like the higher time frame picture has been pretty clear. It's just the smaller time frames have been a total disaster. I remember I looked at one, I think it was on Thursday, and I was like, oh, we just formed a 15-minute after sweeping sell side, sweet. And then it just like almost immediately knifed that 15-minute imbalance, and I was like, whoa, we are a total mess right now, you know it's really like about finding which index is the leader on that given day, and then kind of using that as like the compass of the day. I think it was a situation where Nasdaq had formed the 15, but YM was like extremely weak, and YM ultimately shit the bed. Oh, the hype just hit its target. We'll look at that one later, but um, so anyways, so that's indices. Does anybody have any questions about anything that we just talked about there? Yeah, I see SRR type and he sees the alert went off. Let's see. Yeah, group hug, seriously. I know. It started off really down in the dumps, and then the price action hasn't really assisted either, but it always happens. We're going to get back. We're going to roll. Good reminder to live your life to the fullest while you can, and tell the people that you have in your life that you love and appreciate them when you get the chance, often and always. Very true. Very true. Um, yeah, seriously, I know. It's like, it's inevitable. It's going to happen at some point, but when it happens, it still sucks. Yeah, Bitcoin, I saw Bitcoin got smoked, right? 32. But Bitcoin swept the daily low, I believe. I mean, it's not encouraging by any means. Like off the low that we made on Bitcoin, it was a total mess. Yeah, it's been a mess. I mean, you did actually form little slivers, but leaving this low and not creating the imbalance almost immediately off of that low is kind of sketch. Honestly, go to 59. I mean, who knows? We're about 1,000 points away from the 23,904. Maybe Bitcoin goes and yoinks that next low. I mean, uh, I don't know. I don't know how favorable that is, to be honest with you. But at this point, looking at it from a weekly perspective, to me it's kind of a no-brainer that we go and take this. At this point, that's 60K. And if you take 60K, I think you're definitely susceptible to the relative equal lows that would put you down in that 49 vicinity. Now, from that point, that's when I think I'm going to start increasing the weekly dollar cost average on Bitcoin, because from a yearly perspective, I do not think we're going to mitigate a yearly imbalance. So I think that would be, we'll look back at this and call it a gift. But yeah, this is you'd still be technically in the yearly, but you'd be towards the low of it. There's weekly bullish SMT with YM. YM never took out the second week of February low. Let's see. So you have NASDAQ and you have YM. Ugh, the relative equal lows are so bad on Dow. There is a volume imbalance here. Oh, I see what you're talking about. Yeah. Relative equals here as well. This should be green. You have a volume imbalance here. Volume imbalance here as well. So one thing about this, because we went over some individual names, and honestly, I think maybe like 3 names that were brought up looked good. Everything else kind of looked pretty bad. Even from higher time frame, it looked pretty bad. I think Dow could really fuck shit up because there are some really bad lows, and that would be if there was like a actual prolonged period of downside. But again, I at the end of the day, look, it sucks as somebody who also trades shares, but in terms of like trading it, it's not really a problem. You know, I guess when you first get into the market and you don't really like, I don't know, about being, I don't even want to say short, but like being bearish on the market, about it, but then you realize like it's the same exact thing as being bullish off of discounted lows, right? The only thing that sucks about right now is that we just don't have that higher time frame imbalance to suggest it. That would make me feel a million times more comfortable. And to be fair, look, it would suck short term if we did have this, quote unquote bear market over this year. But trading it short term, it's not really a problem. Honestly, if we get a bearish imbalance down from a monthly or a weekly perspective, I feel like I could tell you exactly where we're going to go, and we could trade it there the entire time. So I am literally not worried about that whatsoever. What will suck is, I might just set the DCAs on those specific names and then just leave it, and just we're gonna have to wait, which sucks because I remember this happened in 23. And I made a bunch of good decisions in 23. I also made a few bad ones, and the worst one was Meta, because I got Meta towards the lows, and I sold it way too early. That'll be like the next thing. If we were to get like this really actual deep retracement, but I am personally not worried, and I don't think any of you guys should be worried either about that, especially trading in short term. When it is to the downside, yes, you'll have an elevated VIX. Things might be a little bit more expensive, and there might be a little bit more volatility as a result of that. But again, directionally wise, I don't think you're going to have a problem, because at this point, most of you probably have a good idea of how to read things from a higher time frame perspective, because that's probably the most important thing that you're going to come across in trading, period. But as long as we have that imbalance, as long as we have that structural guide, we're going to be fine. So I am not worried about that whatsoever, and I don't think any of you guys should be either. If you're an investor, it sucks. Get your money up. Get ready to buy the discount. That's all. That's really the way that I look at it. So, hype. Yeah, I know. The alert went off. I think I set that one last week or the week before on here. Lower, yeah. Great idea. I don't know what the great idea was too, but thanks. Hopefully it was a great idea. Okay, just a couple more things and then we'll get out of here. Like I said, I did probably 50 names in the stream from the other night. So if you do want to look at that, you can. Or if you have any names you want to look at, just feel free to put them in the side now. But the few things that I wanted to look at would be CL. Okay, because I came across this one on the live stream from the other day, and whoa. Okay, let's zoom out. So check this. Okay, so this is light crude oil futures. Okay, what do you guys see here? Let's see if anybody comes out. And if you watched the stream the other day, obviously you probably know what my opinion is. But what do you see? Because there's really two things that are sticking out like a sore thumb to me. Mm, yeah. Yep. Yeah. So I'm on the same page with. Yeah. Exactly. Bingo. So here's the thing. So technically, so obviously this is a yearly setup. So the rate in which this happens, unfortunately, I don't know. I don't know how quickly this could happen. But just from looking at this from my perspective, we spent 1, 2, 3, 4. This is year 5 inside of a yearly bearish imbalance. Now, we haven't necessarily formed a bullish level higher, but what realistically, and I know this kind of goes against all the stuff that we talk about here, but like, what are the odds that oil ever goes negative again? I feel like that's very, very, it doesn't seem likely, right? Very unlikely. And the fact that we spent 5 years inside of this bearish imbalance here, that's a little fishy to me. Okay. And what I mean by that is that whole concept of the balanced price range, right? The more time that we're spending inside of an imbalance, just think about it. Anytime you're inside of an imbalance, in order for you to trudge any higher into that imbalance, you have to fill it, right? And you did fill this one. You filled it and you actually took out the high of the candle that created it too, which is pretty crazy. So, with that being said, the more time spent inside of this imbalance, to me, this looks like a flip. This looks like we're gonna flip this, and then you see the relative equal highs on this up to 106, which at this time 106 relative equal highs with the yearly bearish imbalance as well. That gets you into a discounted bearish imbalance here. I mean, do we LR this up? Now, of course, a low resistance liquidity run from a yearly perspective is probably still going to take time. But if the directional bias on this is higher for a long period of time, I mean, this might be the move. And typically, you wouldn't really expect, tech or, uh, it's almost like a rotational type of idea when oil or energy would be the hot commodity at the time. Um, but I don't know. I think this one looks pretty good. So I was looking at this, and then I pulled up a few individual names on this as well. And the Exxon Mobil's of the world gone. It's so gone. You have Chevron gone. It's almost completed the model on the monthly. And then you go to, there's a couple laggards inside of that energy sector, and I think that's something that I do want to, focus on for a little bit here because um, now, I think there's a chance that we get a higher time frame, bigger picture type of retracement. Now, of course, we didn't form the monthly down on NASDAQ or anything like that, but that's something that could potentially happen. And if that's the case, where are we rotating into, right? One thing about hedge funds, or at least, from the look, I don't have hedge funds on speed dial. I don't ask them directly. But from what I've learned over the years, from reading from people who might have that contact, is that there are a lot of funds that, essentially they're guaranteeing you that your money is not going to be in cash. Your money is going to be in something. So if that's the case, that's like the whole concept behind rotation. Like, where are we rotating next? And I think a prime candidate for that rotation would be energy, oil. And this looks pretty good. And that's just from a yearly. I mean, you can go down into smaller time frames too. And here, so from your quarterly, of course, this range is really off just because we went negative, right, back in COVID times. So even if we, let's just say, put the range at 0, right, technically discounted, bullish imbalance quarterly, turtle soup in that quarterly, no bearish imbalances overhead on the quarterly. That's pretty good. You come on over to the monthly. Yeah, Oxy's literally. Oh wait, I didn't mean to put that yet. We'll look at that one next. But yeah, Oxy. I've had Oxy for so long, and it was just like I'm pretty sure it's like a $5 a week thing. It's not all that much money, but it's one of the names that I do buy, and my average still sucks. But if I get the run on this finally, I'll just be so happy to finally get out of it. Um, but but yeah, again, from a monthly perspective here, there's no bearish imbalances overhead. Now, there is a little bit of a hiccup that could potentially happen at about $69. That's a bearish volume imbalance. But beyond that, you really don't have anything, and you have relative equal highs. So, a move, and even crazier, a move over 78.41 from a monthly perspective creates a monthly breaker. So oil has been so stagnant for so long now. Again, year 5 inside of that same yearly imbalance. With potential weakness on the horizon, where does that money rotate to? If I had to bet on this, if there was a gun to my head, I'm saying that it's going into energy names. And I don't know what the narrative exactly would be for something like this, but I think it's pretty fair. So, but yeah, like for example, like Oxy was the name that was just mentioned. Oxy already looks pretty good on your monthly, and honestly, even better from. I think it was a yearly too. Yeah, there's your quarterly bullish discount. You have one hiccup here, $56. Ideally you would get up into that, and then you'd form a quarterly imbalance, then get into the quarterly imbalance, then run it for those relative equal highs all the way up to what, $80, 80 something, 87. That would be ideal. So I think it's still, again, and I don't know if this is going to be a straight shot. You probably reject this bearish quarterly at the first attempt. Hopefully, just form a bullish in the process. I think that's your best bet. But this is a name. It's got some upside where you actually have levels for. I did BP because this was a big argument throughout the group. I don't know when did I draw this? April of 2025. I remember I did a live stream, and KD and Surface they both had varying viewpoints on this. KD said down, Surface said up, and then I drew this path. And while it's not technically the time horizon that I drew the path, I mean the path is correct, right? We get up into this bearish level, we rejected to here, swept liquidity. From that point, we're making that progress back up to 41. I think this goes to 41, and then beyond that, there is a little volume imbalance, of course, and it's kind of a mess with the volume imbalances. But ultimately, at that point, I would anticipate it going to this high here, at the very least $47. So another one that looks pretty good. I think the bias for this is long too. But then again, like I said, you have some that are just so gone, like ExxonMobil. Forget it. It's just totally gone. You have Chevron, totally gone. It's about to complete the Mando model here at 189.68. That might be coming here very, very shortly. So yeah, I mean, that's the oil idea. But yeah, I'm starting to get really hot on oil. Obviously it's been moving already to start the year. But a little bit of confirmation goes a long way with me. I just feel a little bit more comfortable. I don't mind being a little late as long as it shows some bit of urgency, gives me some sort of structural guide for an idea. I'm all for it. And then again, like, there it is. From a weekly perspective, you're inside of a weekly now. You actually have a lower weekly too. Um, you know, so yeah, I think again, large scale. I think that the energy rotation would make sense if there's going to be a higher time frame retracement. You wouldn't really expect energy to catch too much love if we're ripping face on indices, but there's going to be a rotation. I think it's going to be into energy. So let's see. Inflation is about to be so fucked. Orange juice yearly discount, coffee yearly discount. Is that real? I don't know what the symbol would be for orange juice. So let's see. I remember for a while Red Owl. If I don't know if he's in here right now, but he's in the group. I know he used to track orange juice for a while. Is this the same orange juice you've been using? OJ1? Uh, huh. I don't know. I don't. Where's commodities? It's one frozen con. Oh, gotcha. Where is it? Frozen concentrate. This one. Wow. Yeah, this looks like it's gonna chase 103, at the very least. And then you have a breaker here at 90. Sheesh. Yeah. Sketchy. What do you use for coffee? Coffee cash contract. Huh? Coffee got the yearly. It's a big one though. It's got a lot of space. Um, More time in there, less likely it is to hold up. Yes, yeah. So if you just think about the idea of an imbalance generally, it's like, okay, so if there's an imbalance in price and price is spending a lot of time in there, there's a lot of orders being processed inside of that imbalance, you'd kind of expect it to, essentially be balancing that price range in doing so. So I'm chasing EMP stuff that look really fresh. EMP, I'm not sure what you mean there. Still in higher time frame bullish zones. PCG yearly fits the oil. All right, so let's see PCG. Yeah, I don't know who brought up oil, but somebody brought it up, and I was like, whoa. Yeah, PCG. Is this the Hawaiian one? What was the Hawaiian electric company or something? I mean, this one's got some pretty bad lows, I will say, but like not this one, these, but you did form the imbalance. You are respecting it pretty nicely already, and the bearish isn't until $25, so this one looks pretty good too. Yeah. Energy index. I mean, I used to do XLE, and then there was one more. I think it was a leveraged one. XLE was actually my worst trading loss ever in 2021 or two, maybe. Yeah, monetarily that was my worst trading loss ever on XLE. Yeah. Um, but yeah, this has relative equal lows, but probably for another time. The problem with this is that it's just at all-time highs. There's really not much to work with here. Shit, what was the other one I used to look at? Oh man, I gotta think. I haven't looked at energy names in so long. I forget what it's called. Shit, what was it? It was oh, it's coming. Hold on. What is it? Fuck. No, what is it? Fuck. Oh, this is gonna drive me crazy. Shit. Not SLB, not end phase, no. Oh, OIH. Haha, got it. See? I got a good memory. It just took a little while. Had to calibrate a little bit. This is another one. So, yeah. This one, higher priced, but golly. That was a little sliver of a yearly there that it held up inside of. Yeah. XLE, you know why XLE is probably a rocket? This is to Augustus's question. So energy has just gone without the oil prices going up. Are they inverse correlated? I bet you if we broke down, here, I'll do it right now. The breakdown of what is actually in XLE, I bet you ExxonMobil is a huge part of it. And ExxonMobil obviously just totally gone. So hold on, let me just Okay, what is the what's the word? What is the percent breakdown of XLE? Composition. I mean, I don't know exactly how I should frame this, but here it is. Yep. What did I tell you? Top 10 holdings. 24% of XLE is ExxonMobil, which is gone. 17% of XLE is Chevron, gone. ConocoPhillips, COP. I think I pulled this one up on stream, but yeah, pretty gone. Oh, you bastard. No way. Oh, so it did hit my alert. Bastard. But it got into the yearly fair value gap. This one looks like it's going to the highs too. But gone, right? SLB, Schlumberger. Whoa, this one looks pretty good. I just don't know how much range it has. 58, so that's decent. I know this one moves pretty slow in comparison to some of the others. Relative equal highs to 69, and then, dude, I just think a lot of the energy names look good. I mean, this one I think you can make a good case for. Uh, like check this one. This is like one of those snapbacks. Swept relative equal lows. Did we 1040? Oh no, perfect relative equal lows. Yikes. Rocket bullish imbalance, bounce from that point. This might be one of those situations. If you go back to January of 20, go onto the smaller time frames, you may have taken it out in the overnight or something like that. But it's perfect relative equal lows there. So that's, to me, that's probably why XLE is just so gone. So I wouldn't say like, completely no correlation, but it's just some of those energy names have been way stronger. And some of them are gas too. So yeah, Oxy looks all right. My equal weight port is loaded with energy names right now. No bias, just buying what looks like strength to me. I think you're right. That's super smart to DCA into stuff in higher time frame imbalance. I think I'm gonna set up a kid's account like that. Ask Snaz what his account did when he did that. Hawk. Here, I'm gonna tag him. It's crazy. It takes forever when you use the higher time frame levels, but again, the higher time frame, higher probability. That's all I do for my like investment account. And just try and buy the higher time frame discounts. I don't want to go full with the full amount of money into it in one shot. Just in case it spends a lot of time in there, I can accumulate in that area, build a position while it's in a higher time frame discount, and then just let it ride. And we'll eventually get a Mando model completion, and then I'll be thrilled. But they take forever. That's all. But if you're investing, there's no time restriction, so who cares, right? But yeah, let me tag him because he did this, and I think he did it with his wife's account, and her account went crazy. FIVN 59. Okay, swept last year's low. Good, got into a yearly imbalance. There's one more lower, but that's okay. It doesn't necessarily have to get in there. Let's see what this. I don't even know what this is though. Package software. All these Oh wait, where is he? Software is dead. Remember? There is a quarterly imbalance there. That's pretty good. Yeah, this would be the lower of the two. It's decent. Software just got wrecked. Relative equal highs up to 30. I don't think this one looks bad. Let's see if there's any like urgency daily or weekly wise. Daily's okay. So you definitely want a fair value gap to form. This is a breaker now too. So your daily looks something like this, right? Price run to take out that high from low up to your high. So you want it to form an imbalance, get down into the discounted area where the bullish imbalance would be in alignment with your breaker, and then another relative equal. This one looks pretty good. This to me would probably meet the criteria of either an extremely higher time frame idea or more so like a short dated like options type of idea, where it's kind of quick on the trigger. Wouldn't want it to go below 16, so you'd probably be risking around $2 to potentially make, I mean, 3, 4, maybe $4 higher at the very least. I mean, it's okay. It's just the range isn't that big. So not bad. NEE. Oh, this is Next Terra Energy, right? Yeah. Haha, Mando model complete, baby. Nice. Okay. Wow, zoomed out. This is crazy. This is wow, where was the COVID move? This? Yeah, that's the COVID move. Bullish imbalance there. Run. Wow, that was a little sketchy here on this October 23 low. Jeez. Nonetheless, it's fine. Took out the highs. Yeah, this is one all-time highs. It's that's the thing. It is at all-time highs. It could still go higher. I just don't really know where it would go. That's the problem. That's why I avoid the name. I would prefer like a laggard in this scenario where it's like I actually have some buy side targets versus one that, maybe not. I think we looked at Schlumberger, right? That's SLB. End phase. Yeah, end phase looked pretty good too, right? If I'm not mistaken. I think I did like a little clip on this or something recently. Yeah, so 4 days. You close above this in 4 days, you can create a breaker at $41. That would be pretty good. Okay. End phase relative weekly lows here to get into that fair value gap of 43. I wonder if they can hold this up for about a week. And then put you at 41, get you into the monthly breaker with the bullish imbalance. I think that would be best bet. Now I'm just going to set the alert here. We'll see how it goes. But what I would want to happen would be I would want it to kind of dick around a little bit. Maybe even get into this week. And then next week when you have that monthly complete, you'd now have the breaker with it as well. So you'd have the monthly breaker. We obviously close above this high here. Close above $40 because that would make the monthly breaker. And then you back tap it, you have the weekly imbalance, and you would have the breaker here as well at 41, and then push it again. So that's a good one. But I think that one's more of a next week thing. I'm sorry. Yeah, I guess technically next week, not this week. Yeah, ExxonMobil gone. Oxy was a big part of XLE. How I found it years ago. Yeah, I got Oxy the first time when Warren Buffett bought it in like 22 or something like that. That was before I really had any real idea of what was going on. I remember it pumped, and I'm pretty sure I made money on the options, but the shares that I had gotten were not great. And I also bought into the idea of like diversification. You need to diversify your portfolio. It's okay if your energy names are down and tech names are up. You want to have something to mitigate that on the opposite side. I bought into that way too much, and that's why like literally Oxy's the only energy name that I have. But let's see. I think I read there's a separate bill making its way through Congress that data centers will have to have their own power instead of forcing people to pay higher prices. I really think the nuke names are going to move. Yeah, I wouldn't be surprised if nuclear's in the mix there too. I don't know what a nuclear ETF would be, but
To the best of my knowledge, I don't think that there is one right now. Full on
not
nuclear.
yet.
But you have the companies I dropped earlier, which is like your SMRs and your Oklos. SMR looks like it needs to clear out a few more lows. Yeah.
Yeah, 11. Yeah, some guy asked
Yep.
me about this. I said $11, and he was like pissed at me. I was like, dude, that's just what I see. I don't know. I'm not a fucking cheerleader here.
Yeah.
But
But
yeah,
that'd be
I think
nice.
11 then to 23 would be great at the very least, monthly imbalance. So you could basically 100% that, but it would have to stick this. So it would be like $11 risking 7, risking 4 downside for potentially 12 upside. It's not bad. Oklo is another one you said. Let's see, Oklo.
Yeah.
I got an alert on Oklo at 45. Oh my god, that would be crazy.
Yeah.
Honestly, all that might just be like one earnings. Like When's earnings for this? Like, it literally could just be one earnings. March 30th? Yeah, maybe.
You don't. Wait,
I
why do
wouldn't be
you?
opposed
Is
to
that a
big one.
relative? Is that a relative equal low, or is that a bullish break that you don't have marked? The your blue line. Yeah. Is that a relative
I
equal
think I
low?
was just buy side from the last one.
Yeah.
That? Oh, these are relative equal lows. Seventeen
Oh, okay,
fourteen,
gotcha, gotcha.
1742. Yeah, relative equal lows. Maybe it was that overnight thing. I think this is a
Yeah.
fair place. But the problem is, if you add off the highs of 45 and you do make your way down to this imbalance with the breaker, that's like, you're literally like, you know, over 50% down on your position. So, I mean, look, if you go like $5 a week, it's not, or not looking to make it that big of a position, I don't think it's the end of the world. This is this is okay. I mean, I think you could justify it in here. These are scary though. So, I don't know how big of a position I would really want to initiate at 45, but
Mm-hmm.
if any. It's an ass call center dialer system. What's that?
I
Kyle
think
sent in a scanner there. Oh, sorry. Energy with technical of down 50%. Whoa, 11 pages. Yeah, so there's definitely some energy names to be had.
yeah. The
VLO.
yeah, that was my Valero pickup.
Oh,
That was one I texted.
Valero.
Yeah, I think I picked you. Text you guys in the group. I want it has some ugly lows. I think at like 98. That or
Yeah, I see that.
94, but it just stuck it and went.
Yeah,
Now,
literally turtle souped and gone.
yeah, that's it. Now it's at all time highs.
Wow. That's crazy. That yeah, a lot. So the more common energy names are at highs. Now these can expand higher. Obviously, as you all know, like at some point you're gonna get some expansion. I just don't know where it's gonna stop. So I would prefer to look towards like laggards in this case, where names that could catch up and be a part of those. Waiting for
Well, man, you
1395
know,
on that. Oh, go ahead.
Chevron's pretty slow. Yeah, Chevron's pretty slow, lagging behind some of these energy names.
I think it's almost at the high
Being one of
though.
the bigger players. Yeah, it is almost at the high, but I'm saying it hasn't taken out the high yet. Yeah.
Mm, yeah, Oxy's a
I
big
mean,
one.
that's lagging the. Yeah.
Your favorite BP,
Yeah,
British
what is that at
Petroleum.
yet? $40. No, what's it at though?
Ish. Not
Oh, it's
BO,
at 70
BP.
cents. Let's go. Katie's right. Oh,
Yeah,
38. Yeah. Yeah.
38.
Oh my
Yeah,
god.
I remember we met. I did this. I drew it out, and I remember I was the middleman. Um, you got
Yeah.
your down move. We just swept lows, and then from that low we bounced. But when we talked about it
Yeah.
initially, it was somewhere inside Q1 of last year. So you were technically right
Yes.
on a $10 move down, and then he stuck with the bias of long, and
Yeah. I still wanted to hit $14. If you go back to if you go back to the monthly, there's no monthly bullish. There's no monthly fair value gap.
yeah.
It's taking out the 1994 lows.
Would
$14.
be crazy. Yeah, $14 relative equal lows.
Uh,
Oh man. All right, let's see.
yeah.
SMR, the 25 treat. Yeah. Check IGV software looks obvious. Oh, all right. Let's see. IGV. Whoa. Yeah.
Wow.
At the very least, these lows would make sense. Maybe software will get a bounce here. Um, this we did soup it. Oh my gosh! If we go through these relative equal lows, software is just it's done. It's over. But we did get, or there is a volume imbalance here. So um, hmm.
And then
Yeah, I would
yeah.
say these lows makes a lot of sense. Anything below that, I think software is totally fucked. It's over. Yeah, I got a lot of plans. I want to like I'm gonna have a much better setup here in a month or so. So yeah, soundboard would be cool. I would be interested in getting something like that. Just like like an easy button, you know. Uh, I started a position in ENPH solar. Yeah, I guess fits the energy narrative. I mean, solar, like the one that I talked about a while ago was tan, and tan, if this one, it just
Solar
needed more
ETF.
patience than I anticipated. I mean, we talked about it inside here. It's like, it worked out fine. It was just a long road down, that's all. But yeah, I don't know if anybody still has it. But yeah, I think I made a couple bucks on it, but it just took forever. I didn't think it was going to take as long as it did. I think Songs had tan. Um,
There's a
CVX, yeah.
SoFi as well, which is starting to pull back into the range, into discount. So.
Yeah, yeah. Oh, this is kind of a big spot for SoFi. Quarterly. It never closed that quarterly breaker. That sucks. Oh, there's a lower imbalance there. Um, let's see. Yeah, the last showtime was cash. This would be the next one. This is the last imbalance there. This would technically wick you below the quarterly for a second, and then you'd want it to close back in. But yeah, I know Oxy went ballistic. I know. I like the idea of diversification. I just don't like the idea of piling into a specific name in that regard. That's why I built my equal weight portfolio. Yeah, no, it's not a bad idea. I mean, I look at it now and I say, like, look, is it the end of the world if you have a couple that kind of balance you out a little bit? No, but at the same time, if you can, I feel like you could pick up on specific trends. Like if energy names look great, that would probably be a time to increase exposure there versus increasing in tech, or you could even flip it on the other side and say, okay, well, energy's been getting beat. I want to be a buyer here while tech runs. I could start to maybe pull some off of tech. That's if you're really just managing, like that's a lot of work to manage, like a huge portfolio like that, because um you know you're essentially like scaling tech names on the run higher, using those funds to go into a discounted beat up name and just flipping it. I mean, it's kind of what I would say I do, but I also like to buy the tech dips and take some time to buy them too, because ultimately I believe that they're going to go higher. So um, LEU. Oh yeah, one of my friends made a ton of money on this, and then he just like refused to sell it, and yeah, he got beat. So there's a bullish level here. I kind of like this one, the lower imbalance there. Yeah, this is a nuclear
Lindsay, I see.
NXE. What's that?
No, I see Lindsay's post in Celsius. She's dabbing up my IRA account.
Oh, I know you like the sell. Yeah, I'll look at that one too. I'm still higher up on the list. I'm trying to go down a little bit. Let's go.
No, you're
5.9
good.
CEG. Oh, Stonks, you said 5.9 is an ass call center dialer. Oh, jeez. CEG is tough because it has relative equal lows that I don't really like. This would be one that I would probably avoid, despite thinking the sector would perform well, just based on those relative equals. But it's electric utilities. Maybe it's different. I don't know exactly, but yeah, this is probably one I would avoid just because of those relative equal lows. I don't like that. Oh, tan was my first ever shares position since joining the group. Nice. Well, yeah, it took a while, but it's working out pretty good now. Yeah, you sometimes with the relative equal lows on the higher time frame that they did get swept. I know it's a pain in the ass to go all the way back, but yeah, you're right. You are right. I should. I'm just being a little lazy. That ET I had you look at is oil too. Yeah. ET, right. Yeah, that was one where it was like, yeah, it looks good. It's just like I don't know how much we got to squeeze left. Although it's like $6 higher. I mean, it's just like a cheaper. Okay, so I'm really gonna start from the top down here today and work our way from a yearly perspective down. So Nasdaq first, okay. And actually, before I even go into Nasdaq, I should just mention this. One thing of note that you've probably already realized, and if you haven't already, now that I say this, you might start to kind of put together the pieces. But one thing that has been extremely annoying and has led to extremely difficult price reading from my own personal perspective is the fact that we have insane divergence across the board with indices. Now, we've had this for a while, but I feel like now it's becoming even more and more paramount as we continue inside of this range. And what I mean by that divergence is you'll have one index take a low, the other one doesn't. You'll have one complete a London kill zone, you'll have one that doesn't. See, that's not really high probability conditions in my opinion. That's, typically in a perfect world, you have them all moving in confluence with one another. You'd have indices going in one direction, you'd have the dollar going in the other. It's much more flowing in that manner. We don't really have that right now. And I think that's a lot of cause for the lower time frame slop, if I do say so myself. So here's NASDAQ from a yearly perspective, and I think it's worth noting that we do have the chance. I know we're 10 months out, I understand, but if we walk through this month over month, you'll start to see how it all comes together at the end of the year. But we do have potential to create a yearly bullish imbalance as long as price doesn't see 23,114 by the end of this year. Now, is that a possibility? Of course, it's a possibility. It's February, right? But while keeping this in mind as we work our way down into smaller time frames, here from a quarterly perspective, you will notice that we have an untouched quarterly imbalance starting at 23,904. That's ultimately where I think the market needs to go. And I'll explain as we go down into smaller time frames why I think the market needs to go there. Okay, I've seen even more and more complaints as the weeks go by on Twitter, and even some people in the group are talking about it. How it's just like, oh my gosh, it's like it almost feels like these like liquid rockets in both directions. It's so sloppy and inefficient. That's why I think that liquidity is necessary. So 23,904 starts that quarterly imbalance, and just note the bottom of that is 22,934. If we were to get to the low of that quarterly imbalance, we actually would prevent a yearly from forming. Again, way higher time frame, but worth noting at the very least. Now you do have two back-to-back quarterly imbalances, which is actually a good thing. I'm really not looking for anything like overly dramatic by any means, but I think 23,904, at one point there, we were like 500 points away, and now we're kind of just hanging out. And I think you have a pretty good excuse coming up this week with NVIDIA. NVIDIA earnings coming up next week. I think as NVIDIA is one of the most heavily weighted names across the board in these indices, that I think that is a really good excuse for price to move more efficiently. Now, you heard obviously today that there were news on the tariffs. All of this to me, it was funny. Stonks in the group today brought it up. He was like, every time I see this type of action, like I always come back to this tweet. And the tweet was from 2 years ago. I tweeted, so 8:30, everybody hated the data. And then once market opened, everyone immediately changed their mind and price went through the roof, right? Like, come on, start using your head here, guys. Like, does it really matter? So, today was just another perfect example of that. You had that pre-market downside move. Ultimately, the rocket at 9:30, and then for the rest of the day, it didn't really do too much. So again, I know people are joking around calling me Phil. I'm not Phil, okay? I'm not Phil. I'm not the one who's maneuvering markets, but I do tend to pick pretty good weeks to take these mini trips. So I will say maybe that's a skill, who knows. But again, 23,904, that seems to be an area or a point of interest, especially on my end, where I think price can draw it towards. Now, when we talk about SPY, you'll notice it's a little different, okay? SPY actually is a little bit higher up in its current range than what you have on NASDAQ, but we'll get to that shortly. Now, from a monthly perspective, we'll zoom out, and you will notice that that same marking, or that same level, 20, what the heck is going on here? Yeah, we don't want that lock, and we want to come back over here.
Yeah, something's going on with TradingView, man. You click the buttons and it just like sticks on it. I don't know. I noticed that on mobile and on my iPad that every time I click like one of my tools, I would have to like manually click off of it. I don't know why it's doing that, um, but you'll see 23,904, that would be sell side liquidity. And remember, that is internal range liquidity, right? Overall, on your monthly, you have an absolutely massive range, but sweeping liquidity in the opposing direction of your trend, as long as you close back above that sell side pool, that would imply that we would ultimately chase higher. So, worth noting at the very least, okay? So, that 23,904 still comes into play. Now, I think this is much less likely to happen. This is something that could potentially happen, that if we were to get a serious roll, we have a lot of confluence here in discount of this bullish range, right off of previous all-time high. Those are those 2024 highs, right prior to that Liberation Day discount retracement, prior to the Mando model completion. There is a bullish breaker, there is a monthly bullish imbalance, and this would be a scenario where you could potentially wick that and ultimately close back inside the quarterly. I think that's less probable than sweeping 23,904 and start making progress higher, but it is a possibility. Now you take a look over here at our newly formed weekly candle, okay, and you'll notice really not too many more answers, okay? We bounced out of the same volume imbalance that we tagged 2 weeks ago, right? This is a new week open gap dating all the way back to November, right? Candle close, candle open. That is a bullish volume imbalance gap higher. So this is the second time we got into it, but this time you leave relative equal lows, which you already had relative equal lows, right? There's no imbalance left in between this low and that low. Sketchy, okay? But from a weekly perspective, and you kind of take a look from this perspective, you realize like you don't really have any bearish levels overhead for quite some time. I mean, it's another 500 points higher for another weekly imbalance. So really, going into next week with NVIDIA, you don't have too many levels on either side from a higher time frame perspective. So I think really a lot of the price delivery that's going to be showing up next week is going to be just strictly from lower time frame imbalances. So, from an outsider's perspective, again, this week I was in and out. I wasn't really locked in as I typically am. But, just as an, outsider this week, I would say that this is probably going to be a low hanging fruit type of week where you're really not going to get follow through until after that NVIDIA earnings report. So you'll notice we swept this high inside of that daily bearish fair value gap and ultimately closed below. Okay, so we are lacking that urgency to get that continuation type of move, right? We would have needed to close above that level. This bearish daily imbalance is still technically valid. I would like to see across the board on other indices to make sure that that lines up across the board. But from what we're looking at right now, you have an opportunity at turtle souping with this bearish level still intact. There is one little volume imbalance that I should reference here, but remember, we're really not working with anything above the daily. So if we were to mount that previous buy side at 25,128, then my expectation would ultimately be that we would draw into that 278 area. Following that 278 area, you go and chase these relative equal highs, which would put you into our newly formed showtime. Now, we don't necessarily need to go here, and I would actually prefer us not to. I would prefer us to make our way down first. But this, again, is the area where there's confluence, right? 514, come on over to the weekly, and you'll notice that's that same area of bearish confluence that they would have. So is this setting up for some sort of bear trap heading into the end of the month here with February, as we only have 1 week left, right? So, I'm kind of looking into like how we can structure this with power of three ideas, like what is your accumulation phase? Well, to me, the accumulation phase really has been from November to all the way to now, right? That to me is accumulation. The manipulation move, which ideally for me would be that move through that 23,900, get into that quarterly imbalance. That's your manipulation wick, and then ultimately you would have your distribution to the upside throughout the rest of the year, which I think would be the most ideal situation. And I think that really does line up across the board a bit. When we go into some of these individual stock names, you'll notice that a lot of them are close, but they're not quite there. And actually, a few of them you could justify making moves from where they currently are. So I think that's fair, right? You have a couple that look, ready. Obviously, you'd like to have some carry throughout the rest of the market as well. But you have some individual names that are heavily weighted in the indices that look pretty good, and then you have some that don't really look as good. So we'll get to them, but But that's from a daily perspective, and then you work your way all the way down into a 4 hour, which again this is really just not a really pretty chart whatsoever. So you'll notice you have your high down to your low. You got your discount retracement, ultimately put you into a bearish imbalance. And of course, it couldn't be clean because why would it be, right? Nothing's been clean really recently. So you take a look over here, specifically on NASDAQ, okay? So as disgusting as this is, we do not take out the high of the candle that created that imbalance. Therefore, this imbalance is still valid, okay? So we do leave another set of relative equal highs. We have another set up here at 26050. I think that's probably better off for another time. Again, we are inside of a 4-hour bearish imbalance, and you have your first, second, and third drive. We took out that high here. We did create a 4-hour imbalance, so this really to start the week is going to be my opening pivot right here. Okay, if we can get into that 4-hour imbalance and respect bullish order flow, then I don't see why we don't draw into that 260 area. Remember, where did that 260 area come into play? That is a daily bearish volume imbalance, right? It's 278, 260, very close, okay? But that's where the overlap would be in this scenario. But a failure at this 4-hour, I see nothing here that would hold this up, to be completely fair. You look left, this imbalance has been tagged 17 times, right? It really shouldn't even be on my chart at this point. And this imbalance was following the sweep of liquidity all the way back from November, okay? We did get down into, whoops, let's zoom out a little bit. Let's see if there was some 4-hour confluence there. Not really, no. No, there really wasn't even 4-hour confluence there. I guess you can make the argument for the inverse imbalance here, but not something that I really care too much about. And ultimately, again, like I said earlier, I think ultimately my draw on liquidity is lower. I don't really see why we wouldn't go and chase that quarterly imbalance while we have the relative equal lows. Now, there is one name that has been a total problem, and that name really has been NVIDIA, because NVIDIA has a very, very similar setup to NASDAQ, but it is way higher currently than where NASDAQ is. So, for example, like here, it looks better from a quarterly as well, but you see all of these lows, these are way too smooth. I would expect those to get jagged. And if you come over here to the quarterly, see NVIDIA, you have that quarterly imbalance here. But now look where we are currently. We're $20 away now at this point. So NVIDIA really is throwing a wrench in the higher time frame idea for me personally. But thankfully there's earnings, and hopefully this clears up for us by next week. So that's NASDAQ, that's indices. It's not really indices. I could go through each of them, and I really should, but let me just take a peek at the chat really quick and make sure nobody said anything. Group number is going to crush last month. I think so. Yeah, they changed their mind. Do the hedge funds usually wait till a couple days later to crash the market after news like this? I don't know. I don't really think that has any impact. I think all the answers are on the chart, to be completely fair. Yeah, shut up and long. Yeah, we'll bring that back from last year, right? There was an hourly there. Gotcha. Okay. So it wasn't a 4-hour imbalance, but there was an hourly where we bounced from yesterday. All right, so let's take a peek at SPY, Dow, and then I want to do some of the Mag 7 names, and then I'll take requests. If you have them, put them in the chat. If you don't have access to the chat, I have a tweet before where I said just like drop your comments. It's just easier for me to go through, and that way I won't miss anybody's if you do it that way. But I got some time. We'll crush some charts tonight. All right. So let's take a look at SPY or ES, right? I'm using futures, and I always use futures because to me, I would rather have the more data, right? More data, the better. So futures is running 23.5, and the ETFs closed at 8, open at 4. There are levels being created in that overnight session. You'll see it as a gap if it were to make some big move in early London or even the end of the Asian session. But I would prefer to be more specific. I would like to have a specific level rather than that huge gap. So that is why I look to use futures data. Now the price movement is going to be the same intraday. So, for example, when I trade options on SPY or QQQ, I do look at the futures ticker for that additional information. Price is going to move the same. The numbers are going to be different, yes. So it wouldn't be a bad idea to at least check where the price is. But in terms of movement, I would prefer to use the futures ticker because I think it gives you much more information to make decisions. Now, again, this is also a question that gets asked sometimes, like, oh, well, why does mine have like a red dot or something? It's like, okay, you actually have to pay for live data. It's like $4 or $6, whatever it is. And that way you get up-to-date live data throughout the day. But okay, so SPY from the quarterly. Okay, as I noted before, look at the difference between what you have on Nasdaq and SPY. SPY is like 400 points higher than its quarterly imbalance, while you have Nasdaq, which is like, it's 1,000 points, but a little over 1,100 points. But just look at the difference in terms of where we are to where the imbalance is on each. Right, it's way different. But if you go back to last April, you will notice that when we had that Liberation Day move on SPY, you got discounted on that run. Oh, whoops. Oh, this is ridiculous, man. Come on, what are we doing? All right, low up to your high. Here's your discount retracement into a bullish imbalance. There's your run through highs to complete the Mando model. And if you go back, like, where did I have it? I think I have the monthly. Yeah, we're gonna have the greatest reversal of all time. Like, that is a textbook Mando model, higher time frame. Like, just perfect setup. But there was divergence there too, believe it or not, because you had Nasdaq. Are we doing this again? No. Okay. You have Nasdaq where if let's just zoom out for example, we were so close to getting discounted and we didn't quite get it. It was like 5 points off. So on my range actually is technically different on Nasdaq than what it would be on the S&P. So maybe you even see divergence into that imbalance. That's also a possibility here. And you might have some excuses over the weekend with potential conflict in the Middle East. You obviously have the tariff ruling today. So you have some excuses for price to drive lower. So again, I think that would just make for a much cleaner market delivery wise. Of course, a downside move into the quarterly imbalance. Where we are currently on Nasdaq, it's really not even that far. But overall, we've been just trading so poorly inside of that range really since that Thanksgiving week. Like we just got to rip the Band-Aid off, I think. So but anyways, we'll go over to ES again. So you'll notice there's no imbalances here. You did get into that imbalance here and push price higher, whereas on NASDAQ you did not. So you have SMT off the highs as well. There is a volume imbalance here, and this is bullish. One thing that I definitely do not want to see in terms of the S&P is a monthly down close below that volume imbalance, okay? Because if you close below the open of that candle here on the monthly, that actually sets you up for a bearish order block on the monthly. Again, it's not really ideal. I would not want to see that because that could imply further downside, especially when you look left and you see you don't really have too much other than that quarterly, which on the S&P is like 400 points away. So don't really want to see that. Okay, ES from a weekly perspective. Now this is, I don't want to say kind of. It is a total mess. But if you look inside your most recent run, we did get into that new week open gap, and we've bounced thus far. There is a volume imbalance coming up on, where is it? On and look at the mess that we have going on in here. Look, all these red levels right now, these are all just volume imbalances. Those are gaps on the weekly. Like, that is a total mess, but you do have one here as well. So candle close, candle open, that's another one that's about 29 points higher on the S&P. And then from this week, you have a little mini bullish one here, but again, relative equal lows down here. There's another volume imbalance here on the S&P 6651. That would be before getting into that quarterly imbalance anyways. So the thing about this quarterly imbalance, which makes it even more annoying, is that like technically nothing is implying that we have to go in there. Right? We don't have any higher time frame imbalance. So as much as I think ultimately we should go down into that area, there's still no weekly fair value gap or anything like that. And the reason why I put such an emphasis on this weekly fair value gap is because if you go back historically and all of these times we had these higher time frame retracements, every single one of them is paired with a weekly or a monthly bearish imbalance. There's your bearish imbalance here. There's your discount retracement. And I've done this a million times, but I can kind of go down the line if you guys want. But come back over. Where was the last bear market? Here in 2022. Here it is. There's your bearish weekly imbalance. There's your rejection. There's your deep discount. Okay, so you could do this all the way back to 2000, the .com. You could even do it with 2008 as well. So that's always something that comes plays in confluence with these higher time frame retracements, and we don't have that right now. So as disgusting as this is, I mean, technically there is no weekly that is suggesting you have to get this like long term or higher time frame retracement just yet. I think it would be cleaner, and it would be even better if you get into that higher time frame level without forming the bearish level down, because then on the way back up you don't really have too much in the way. You could be pretty smooth back to the upside. So that is the S&P. Dow, very similar to the S&P, where you don't really have too many levels that have formed since. I don't even think Dow technically even has a quarterly imbalance where the others do. Let's just see really quickly. Dow is in the process of creating one, so that would be worst case scenario if it took until next quarter, which would be April, to get into it. That would be disgusting, because then you would basically just have, you'd have 5, maybe even 6 more weeks. I don't know how the calendar falls this week, but this year, but you would potentially have 5 to 6 more weeks of garbage trading like this. That would be so awful. I would definitely just prefer us to get this over with, get into the quarterly on NASDAQ, and then make some progress from there. I think that's our best bet. All right. So let me pop back to the chat. Let's see. Anything change? It's all good, man. Yes, we can definitely look at that one. I'm going to go through the full list, and I wanted to do some of the Mag 7 right now, so we'll definitely check out Meta first. That'll be our first look of the night. So from a quarterly perspective, let's pop in on Meta. Okay, so with Meta, you have pretty bad lows. Nothing from a quarterly. Again, you do have a bearish volume imbalance that we got into and rejected at this point. Okay, but looking further, 581, you have sell side liquidity, and there is a volume imbalance at 576 and 570. Meta has so many bad lows all the way down to 412. Now, you see I have an alert there. That would be the most ideal location for an outsider, but doesn't necessarily have to get there. That's the question I ask, and that's why we go down into smaller time frames to see if we can be a little bit more precise and make sense of all of this. Okay, so from a monthly perspective here on Meta, you'll notice you have your total sandwich here on the monthly. You bounce out of this bullish level, but you formed a bearish monthly imbalance here, and we've rejected it thus far. To me, this looks like we're going for these relative equal lows. I don't see why we wouldn't, and get into this volume imbalance. Now, inside of this volume imbalance, we did already get in, which stinks, but taking out these lows inside of it's not bad. So is there any confluence at 570? Yeah, 570 is that volume imbalance here on the quarterly. Okay, that's decent. But yeah, from Meta, like, honestly, I really am not a fan of this unless it can clean up some of those lows. This is one of those where it's like, I don't necessarily think this is done just yet. You'll see we filled these bearish imbalances and have since rejected from that point, and there's been no urgency to move higher, right? We don't have that bullish imbalance to the upside just yet. Now let's see the daily, see if anything's different here. Not quite. Okay, so all we did on Meta to start, very similarly to what you saw on NASDAQ as well, where we took daily liquidity, closed back inside of a daily bearish imbalance. So really not too ideal on Meta. This would be the pivot. If you were to get up and through this level, then honestly my expectation would be a chase higher, but I don't really anticipate this being a sustained run, and that's simply due to the fact that I believe the higher time frame draw on this is lower. All right, so that's Meta. I don't think Meta's ready just yet. Now another one, again, we brought up Nvidia. Nvidia has that quarterly. I think it's worth looking at again. So big earnings week on Nvidia here. Quarterly imbalance below, that starts at 169.55. Do you see that type of action, or do we just continue expanding? Well, let's take a look at smaller time frames and see if we can come to get some a little bit more information to make a better assessment. These lows are really bad. I'm really not a fan of these lows at all, honestly. Now, I would feel way more comfortable if we could sweep those lows. I think that would be awesome. And then, even this is kind of a nightmare situation on Nvidia, I think, but you have a bullish breaker in discount of that bullish price run here, which is, it's way lower. It's 151.49. Now, here's the biggest takeaway on Nvidia, and this is annoying. The biggest takeaway for me on Nvidia is that, similarly, we don't have that higher time frame imbalance. We don't have a monthly bearish imbalance here, right? You have a volume imbalance, but if you go back and back test this historically, this isn't a brick wall. Whereas if you go back historically and test the bearish fair value gap, which we had here, this and right here, I'm sorry, this tends to be a very very good indication that we will get a higher time frame discount. We still don't have that. Okay, so that's the thing about Nvidia. It's like, as much as I want this to go down, it's still technically not uh, offering us any insight. There are relative equal highs up to 194.49, and then again that volume imbalance up to 202.49. If we were to see price drive higher up towards that 202.49, I think this just kicks the can down the road, and I think we're going to be dealing with some pretty sloppy price action for quite some time. But from right here, honestly, nothing's really implying lower on Nvidia just yet either. So as much as I want it to go down, and as uncomfortable of a long as this would be for me if I were to be long on something like this, there's really, there's not much suggesting that we necessarily need to get brick walled at this point, especially with how much time we've had spent inside of this weekly bearish level. So just another one where it's like, ugh. Nvidia 4-hour relative equal high need to get tagged before we go lower. Yeah, so those would be the same as those daily highs, I believe, right? Yeah, probably up to 190, 194, let's see. So who knows if that would be even a potential setup early in the week, if we take that, generate the liquidity for a push lower, or vice versa. Do we chase these relative equal lows early to start the week, and then you see a push higher? I really think price action slowed a lot, and I think Nvidia has played a huge role in that. So, all right. So the next one I want to take a look at is Tesla. Again, if you guys have any that you want to take a look at, feel free to put them in, and we'll look. But I got a list that I want to go through as well. I just want to do the Mag 7 first. So Tesla. Okay, with Tesla, you'll notice that we have a quarterly imbalance with relative equal lows. To get into that quarterly imbalance, that's at 382. Discount of that range actually doesn't start until 356. All right, so that's like, again, that would be like, nightmare option where you have Nvidia chasing way lower. You have really deep market retracement across the board. That would probably be like 22 on NASDAQ, which again I don't think is really all that likely. I think you could just tag this quarterly imbalance and go from here. That would be the most optimal. But coming over to the monthly, similarly, relative monthly lows right now. Ideally, we would sweep that and then next month order block it, right? Close over 421 and keep this show on the road. Just keep it rolling. But again, because of how slow and drawn out this has been, you're not creating levels in either direction. It's just like something has to give here. Like, we need more information, please, right? And this goes for really any setup across the board for me personally. Now, you might have some vary outside of the S&P and NASDAQ, but right now, all three of those names that we just looked at, other than Meta, I think Meta, you can make a pretty solid argument for a odd NAM discount retracement, which would put you lower. But other than that, from a higher time frame perspective, I really don't have a valid setup for my models in particular, right? Like, in order for the Mando model, I would need a discounted imbalance. We are not in discount and there's no imbalance. Okay, so the Mando model from a higher time frame perspective is out right now. Then you go into the odd NAM approach, and with odd NAM, my second model, you don't have that first bearish imbalance to the downside to suggest 50% of the range is necessary, right? Remember how I just was talking about, okay, when you get that imbalance, you could look for discount, right? This tale as old as time. You can go back on any chart and do the same thing. But we don't have that right now. So really, everything from a higher time frame right now, again, there might be a few here and there, but for the most part, there's really not too many names that are meeting the criteria for me at this time, which is just to put it, straight, it's just annoying. It's like, all right, like, can we get this going, right? And I think across the board, a lot of people are feeling the same way. It's like, patience is really being tested right now across the board. And, ultimately, I think those who are patient are going to get rewarded again, but it takes time. And it's frustrating in the moment because you just want to go 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 go. I got a shiny new toy, I want to use it, but if nothing's warranted, then why push buttons? There's no point. Um, so that's Tesla. Where are some of the others? I guess we could do Apple. We'll do Apple, Microsoft, and then we'll move on. So Apple is one that varies across the board. So you'll notice that Apple actually was one of the only ones that did get into its quarterly imbalance. Check that. Tagged. And it bounced very strong from that, right? That's what I wanted across the board on everything else, and we only got it on Apple. But Apple's looking pretty solid off of that monthly. But our first tag, we chase higher, we run into this bearish volume imbalance, we reject it up into this point. Do we retrace lower and drive deeper into this discounted range? Ideally, right? That would be awesome. Very, very similarly to what you see on Microsoft. So Microsoft, deep discount, as deep as you're going to get from a monthly perspective here. Now, if you were to shift monthly structure, what that would essentially be doing is getting you that quarterly discount, right? You're shifting structure here on your monthly, there's your quarterly discount. So in order for us to ultimately get that quarterly discount, you would have to shift structure on the monthly, right? That's the idea, and that's why turtle soup, that concept that we talk about, that's why it's so powerful. And it's simply just for that reason. When you do have that change in the state of delivery on a smaller time frame, it's typically just bringing you into a higher time frame discounted imbalance. So yes, it is. Somebody had just brought up that not waiting for an imbalance to form is applicable on all time frames. Absolutely. This would even that would even be like a 5-minute conceptual idea for me, right? If you don't form that imbalance down, I'm not trying to play shorts because that imbalance is what I'm using as the structural guide for that trade. And if I don't have that imbalance, there's just no point for me to do it. There's not any reason for me to be doing anything in that scenario, right? So, again, Microsoft, very similar situation to Apple. And then Amazon, also very similar. So I think Amazon was more so, okay. So the monthly got into a discounted bullish imbalance, which is good. 211.03 is where you need to close the monthly above for that turtle soup action. I believe that would be powerful. Now you come on over here to the weekly. And from a weekly perspective, we talked about this one actually last week, and turned out to be great. If somebody go back and clip that one, maybe I'll get you a T-shirt. But last week we talked about Amazon, like, this is really the spot. You need to close back above this 197.98. This is your sell side target in deep discount. There's a bullish volume imbalance. There's a bullish breaker. So far, so good on Amazon, but Amazon is about to get into a massive weekly bearish imbalance. Now, the thing here is that we've actually gotten into discount of this bullish range, so I'm not necessarily bearish on this, right? We've already gotten our discount, right? I know there's a bearish level that can slow price down. I view those as speed bumps. Is it necessarily the rejector, though? I wouldn't really classify it that way. Could we reject from this point? If we're looking at the bigger picture across the market and we were saying that there's potential for us to retrace into the quarterly imbalance, I think that's a possibility. But a rejection on Amazon from here, I don't know if it makes as much sense as some of the others. Whereas, just a slow grind to take, maybe like a move like this to get up and through that final imbalance here prior to making your way back up towards highs. Because Amazon really has been a laggard now for like 2 years. Really hasn't performed that well. But long-term, big picture perspective, you would anticipate it being much better, right? So that is Amazon. All right. So now let me come on over here. Okay, I think the chat is all uploaded. Let's see. Let me just make sure and I didn't miss anything. Okay, good. Great. All right. So now I'm gonna just pull up the tweet and see which ones I'm missing, and then we'll go through those, and then we'll see where we're at. So. Let's see. Yeah, I know, Snaz. I know. It's a bot. I should just block it. It's a bot. It's so annoying. It comments on literally every post in seconds. It's like the bots comment, but the 250 people we have in the group can't drop a comment to save their life. It's amazing. All right, let's do it. All right, the first one we'll go through right now is A-Lab. Okay, so A-Lab. Let's see. All right. Whoa, hey. Okay, so A-Lab got into a quarterly bullish imbalance, which is great. The lows all time are pretty bad, just to be fair, right? Like this relative equal low is not great, but bullish quarterly, that's good. That's something you can build off of. Come on over here from a uh, monthly perspective. Oh, this is a semiconductor name. Might be worth looking at SMH too. I don't know if this is in SMH or not, but it might be worth looking at the overall strength of the sector itself. You got into a discounted bullish imbalance here as well. Okay. Yeah, this is not bad at all. Okay, this is also a volume imbalance worth noting. Um, ideally you would close over that orange little dot here, right? And because that is the midpoint consequential encroachment of that imbalance. So midpoint of the imbalance, if you're able to close above it, that's showing you willingness to go higher from this point. You gap down into discount, which oftentimes leads to bullish order blocks. This name's actually pretty good. So yeah, weekly's fine. Weekly looks all right. Now you did create a little bit of a weekly bearish imbalance, so ideally you would mitigate that. And if you can mitigate that, I'm looking up and I don't really see too much untouched at this point besides that. This has been filled, that's been filled, this has been filled. This bearish volume imbalance is still valid, so candle close, candle open, that's a pretty big level, but we already rejected out of that point. So, yeah, not bad. Not bad. So now from this point, you know, you can look at it from a number of different ways, whether you are, uh, it really depends on your own, like, horizon for this, right? But ideally, you'd form some sort of bullish imbalance on the daily time frame to suggest you would ultimately gravitate towards discount of the range, right? We don't have that right now. So you could be a little bit more aggressive and start looking at smaller time frame levels, uh, which would be fair. Obviously, if you're looking at this from like a higher time frame perspective, you'd probably want the daily to form. That would be a little bit more comforting to me, at least. But yeah, no, this is a good one. This is good structure. So good find there, G. Next is, let's see, RBRK rubric. All right, let's see. RBRK. Okay, so rubric a little different. So with rubric, we've already gotten into this imbalance. And the reason why I'm not loving that too much is because that was discounted, that was a bullish imbalance. So now what this would be is if you were to sweep this low, yes, you are getting into a quarterly imbalance that we didn't fill yet. But what does the yearly look like, right? Because that would be a shift in structure from a quarterly perspective. And the yearly, believe it or not, you actually have this. Wow. Look at that. So you do have a yearly imbalance there as well. So that quarterly sweep would put you into a yearly imbalance. That ain't bad. But I do think this one's going to draw towards that low first. The lows on this all-time are pretty bad, but at least you have some structure here inside of that. Now, following that 47.35, same idea here as what it would be with A-Lab. It would be form the first imbalance to the upside. If you could form the first imbalance to the upside, that's showing me urgency to move higher. If you have urgency to move higher, then ultimately I would be anticipating a retracement to discount of the range. Now you have a bearish breaker here. The move off the bearish breaker is from here. So in this case, obviously I don't believe this range is set. I do think that ultimately you're going to gravitate towards those lows. But from that point, your range maybe looks something like that. And, first imbalance to the upside, you could be looking at a pretty decent run from that point. So that is rubric, another pretty good one. It's close, not quite there. Z-scaler is a pain. Z-scaler from a yearly looks amazing. So we took out previous year's low. We have a yearly bullish imbalance here. Come over to your quarterly. Z-scaler, you have some pretty bad lows here that needed a little cleaning. You have a volume imbalance here from the quarterly perspective as well. This has got to stick. This is a quarterly breaker as well. I think this would be very important. The failure at this level is horrible on Z-scaler. Um, so that's really important. Now, could you justify it? Sure. Kind of gross, just to be fair, but clean up some of these quarterly lows, and then you'd want it to snap and close back inside. So I think that would be ideal on Zscaler. But out of all the names so far that you brought up, this one to me looks the worst right now. They have the lows here. There is an imbalance from a monthly at 128. Again, that would clean up all of those quarterly lows. And then from there, you'd really need to move up on Zscaler. So that's Zscaler, and then net. I think, if I'm not mistaken, net looks better. Let's see. So net from the yearly was awesome. Low, high, discount, bullish, imbalance, run through highs. This is one of those old-fashioned. Where is it? The crystal ball. There we go. I think I put Ready Player One on this one. Let me see. It was. Yeah, it was. Weekly and monthly bullish imbalance is filled. Ready Player One. Yeah, that was sweet. So that one, 300% or something. But yeah, net looks. The quarterly doesn't really look good, just to be honest. You look left, no imbalance here on the quarterly. Let's see what the monthly is. Hold on, close that. See, you have a potential to form a yearly on net, but you couldn't go to 119. That's scary. So this is like a setter year. So yeah, quarterly. You have a sliver of a quarterly here. Not really too convincing, honestly. Let's see the monthly. See if there's anything better. The monthly looks solid. This is a pretty big spot for this one. Yeah, you wouldn't really want to be failing any of these bullish levels, especially when you don't have any bearish levels overhead. That's pretty important on net. So from a monthly, discounted bullish imbalance is good. You actually technically have a breaker here, which you would want to reclaim in the next week. So over 178.15, that would be important for this one. So that is net. Next up, we have Lemonade. Quarterly. Lemonade. Okay, so on Lemonade. Okay, you don't have much from the quarterly. You got into 50% of that quarterly range, and you are rejecting at this point. It is kind of scary that Lemonade, what is that? Just a little sliver of a imbalance there at 47. Let's see, what is it? Yeah, it's a 6-cent imbalance. So not really the most convincing. This is what we would call a mitigation block on the quarterly. So not really the most encouraging there. Let's see the monthly. The monthly has to close back inside of this. If you fail this, I think this is in big trouble. Yeah, because we hit 50% at this point. Honestly, all bets are off. You hit 50%. I'm not nearly as bullish as I was on this one. Once you hit that 50%, you see it. Aggressive rejection off of that point. So Lemonade, scary. You are in a weekly bullish imbalance, okay? So let's see if you can close out this month hot. You don't necessarily have any bearish imbalance overhead until about $76. You need to start respecting bullish order flow on this, because right now you're essentially just catching a falling knife. You haven't really shown any urgency higher. Let's see the daily. Yeah, the daily hasn't formed any bullish level either. You rejected out of your most recent bearish daily as well. Holy crap, what happened here? Did I just completely miss this? I think I did. But yeah, Lemonade, you got relative equal lows here. Yeah, you have more relative equal lows here too. Yeah, this is really important on the daily / weekly for Lemonade to catch. Really needs to catch here, because the higher time frame's really not showing too much. And I think it's really important to close the monthly back inside that imbalance. You have this, but That's like oh shit territory right there. All right, so that's lemonade. Reddit. Okay, Reddit, another one, quarterly imbalance. Currently below it, not the end of the world. You could still close the quarterly back inside here. Let's see the monthly. Jeez, a lot of these are really getting that sharp, like aggressive scare move to the downside. Reddit monthly looks pretty good. Low, high, discount, bullish imbalance there. In confluence with that quarterly imbalance, pretty good. Weekly, okay, weekly got into the bullish level, respecting 50% of that imbalance. This is a bullish breaker here on the weekly as well. Reddit doesn't look bad. At least it's structured. So let's just see if there's a daily level that might be the go-to. You have multiple weekly bearish levels overhead. I don't think this is going to be a rocket by any means, but at least you have a good foundation for a move higher here. See, I wish it would have formed like some sort of bullish level here, and it didn't. Um, Next step really here from a daily would be get above 152.50 and close above 152.50. If you could do that, that creates a bullish breaker on the daily time frame. That's pretty encouraging, especially with this volume imbalance here. So yeah, that would be the step one. Everything looks okay on Reddit except the fact that it just has not formed a bullish daily level. That's really it. If you could form that bullish daily level, I think you're really onto something on this one. So, all right, next up, SEDG. All right, let's see. SEDG. Solar Edge. Okay, so Solar Edge, quarterly perspective. We got into a quarterly bearish imbalance after sweeping all-time lows. I remember this one. I hate these lows so bad, but it's okay for now. Let's see. Quarterly imbalance here that we didn't get into. See, I don't like when they do this, when you create the quarterly level and you don't get into it, because if you remember, Iron and NBIS both did this to start off January, and then they ultimately rushed back for it. Iron in the overnight session did end up hitting that level, but they rushed back to tag it. I hate how it doesn't show up on here either. It's so annoying. But anyways, but yeah, that would be one thing that I guess I don't really love on Solar Edge here. So let's just see monthly. All right, so the monthly, there's no monthly imbalance, man. Yeah, this one's a little sketchy, a little too sketchy for me, I think. Um, that's a volume imbalance right there. Let's see how the month closes on that. But the fact that we have no bullish imbalances underneath us to catch is kind of scary, honestly. Yeah, I'm not really too thrilled about that. Um, U.S. oil. I'm just gonna look at CL because I'm pretty sure I have that charted already. Let's see, CL. Okay, so CL is now in its fifth year, or what it seems to be. 2, 3, 4, 5, 6. So what is that? Yeah, about 5 years inside of this bearish level. As you can see by the colors of my imbalances, it's been a long time since I've charted this, but ultimately I think oil is going to be a big runner here this year. And again, if oil would run like that, you typically wouldn't expect tech or other things to run as well. But oil looks pretty good. You've stayed inside of this imbalance, essentially inversing this over the last 5 years. I think CL is pretty good. So again, here, one thing that I'm not a huge fan of, quarterly low. I believe we left these relative equal. 55.12. No, we didn't. 54.98. Nice, we took it out. Dude, yeah, I think oil looks pretty good. There's no bearish levels overhead. Yeah, I don't see why oil doesn't perform well this year. Yep, there's your turtle soup. You sweep this high. I mean, this is way far away, but 78.40, over 78.40, you get that monthly breaker, and then you look left, and you're really only dealing with this one more bearish level overhead. So yeah, I like oil. Let me just see. Maybe I'll pull up some oil names. Because I wonder. Oh, no, not that. Check that yearly on Oxy, man. Alright, so Oxy. Alright, you know, I'm going to rechart this because for some reason it's all messed up. But low up to high. Relative equal highs at 73. Deep discount, bullish imbalance tagged, respected. From this point, you have bullish imbalance. Wow. Man, Oxy looks pretty good from the yearly. Now, there is a little sliver of a yearly bearish fair value gap here. Let's see if that's in the way. Wow. Yeah, Oxy 56.49 is the next quarterly level. But I don't know how bearish I would be knowing that we got discounted. We got into a bullish imbalance from this point. Let's see Chevron. Tuh, where's Chevron going, boys and girls? I remember we talked about this one. I forgot who brought up Chevron, but it was one of these live streams. I was just like, okay, where are we going? And everybody pointed higher. So, yep, almost. Mando model completes on Chevron at 189.68. What else? I think ExxonMobil never came down. Yeah, ExxonMobil is so gone. Oh my gosh. What else? COP and relative equal lows is pretty bad. What about KD and surfaces battle? Wow. Okay. I mean, technically, I know I blindly did this, but we got into this bearish level, right? We rejected it. We came down and we took out that low, and now we're bouncing. So it doesn't follow the time path, but the directional move is correct. That's great. Yeah, BP looks like 41. Yeah. Yep. So yeah, oil. Wow, oil looks pretty good. Damn. Bro, I'm blocking this guy. Um, let's see. Hold on. Let me just go through the chat and make sure I didn't miss any. What did I say on Coinbase last week? Sorry, I totally forgot. Let's see. I'll just do it. All right. So yeah, those are all the ones that were brought up. But let me see. Those are all the requests. All right. Let's see. Coin. All right. Let's see coin. Yeah. Oh, okay. I remember. Yeah. If I had to guess, what I said last week or whenever the last time I did a live was Coinbase sweep the quarterly lows. From here, you kind of have to get up and go, right? You want to close that quarterly above. Same thing would apply from a monthly. Swept monthly low. Beautiful. So far, decent reaction. Little scary, that 114.51, just to be fair. But otherwise, it's not too bad. Let's see, weekly wise. Yeah, weekly's pretty good too. Yep, swept the low. So far, so good. You are inside of a weekly bearish imbalance, though. And I'm not totally convinced that Bitcoin's low is in just yet, as we are now just leaving weekly lows. You have a bearish level here. We are discounted, and we are inside of a yearly bullish imbalance. That's really encouraging, but that's like a long-term, long horizon type of idea. Bitcoin's monthly here, that's a pretty, we're in the process of forming a monthly bearish fair value gap, which is also not really that ideal. I think the worst case scenario, if you do get this long drawn out downside move, would be price bouncing into here and then ultimately rejecting from that point, and even potentially chasing that would be really bad. And that's, again, like worst case scenario if we get this large drawdown across the market. But I'm not totally sold on that just yet. We have been discounted. You did get into a bullish breaker. You are discounted from a monthly perspective with the monthly fair value gap. Very slim, but at this point, kind of hard for me to be higher time frame bearish on Bitcoin when Bitcoin's inside of a yearly imbalance. The last time Bitcoin was in a yearly imbalance, we went from 15,000 to 126,000. So honestly, patience, patience, patience. That's all. So, all right, let's see what else. Core weave. Okay, let's look at core weave. Okay. Oh wow, we're really higher time frame. Hold on. Okay, core we've got into quarterly discount. That's pretty good so far. And there's no quarterly bearish imbalance forming. That's even better. Okay, core weaves monthly. You got into a monthly bearish level and you were rejecting from this point. Not great. Let's see as we go down. Let's see. Okay, so from the weekly here. Okay, so my odd nam completed here. So you have your high down to your low. You have your retracement into discount of that bearish range, and thus far you're rejecting. This is a little suspect to me, just to be fair. We are inside of a weekly breaker, which is solid. It would have to bounce from here, or you're going to take 63.80. Let's see if the daily gives you any more clues, but daily bullish imbalance. Okay, it's not terrible. You are respecting bearish order flow, if I'm not mistaken. Let's see, did we get in? If we left those relative equal highs, then you could totally bounce here. Let's see, 172. This is 168. Yeah, you have relative equal highs into a daily fair value gap here. This is the spot right here. That's your daily fair value gap. Don't lose it. Don't lose that or you're cooked, but that would be the spot. So not terrible. If these are relative equal lows, I'm going to be scared. Yeah, I'm really scared actually. I would have preferred it to get into that bearish level and then reject down lower, but you could potentially bounce here, get this, and then roll. But I'm not sold that the bottom is in on this either. ET. I did lemonade already. Let's see. Nice. ET's pushing yearly highs. Energy name again. I think energy is going to do great. Okay. Got into a quarterly imbalance. So far, so good. Your next quarterly bear. I remember this from like 2021, 22. It was popping. Okay. So I think upside 25.36 would be your best bet. That's the quarterly bearish imbalance in discount of that range. And you have relative equal lows at all-time lows. Now I don't know if that's going to happen, but short term it looks fine. No bearish levels really. You're in the process of forming a monthly imbalance, so as an outsider I would prefer it to get into the monthly imbalance and then leave from there. But I don't know if you guys are noticing this, but there are just so many disgusting charts out there. Really. Sheesh. Relative equal lows, relative equal lows. I mean, I think this one's gonna chase higher, but it's really not the prettiest of charts in my opinion. Right, and the reason I say that is just because like this would be the location you would want it when it's in a bullish level. Right now, it's chasing higher. You actually swept liquidity there. There's a bearish volume imbalance here, and you tagged it to the tick. So, I mean, honestly, like this one likely will go higher, but I don't really like the setup itself. TTD, sure. So, TTD. I should pull up the yearly on TTD as well. Hold on. Alright, so TTD currently below yearly imbalance. Not the end of the world. It could be. And I think the scariest part about TTD is that it has a yearly bullish imbalance at 1094. Your quarterly here on TTD, we're currently below our quarterly imbalance. Scary. Let's just see one thing. Hold on. Oh, so we're just range expanding. It's not terrible. This would really have to snap. It really kind of has to close the quarter back above 32.38. If not, you have relative equal lows here at $13, which would ultimately get you into that yearly imbalance, which is at 1094. Yikes. Yeah, this one just has no urgency whatsoever. So, this is one of those ones that I tweeted a while ago. It said 39. It's way below 39 now. Sheesh. Yeah, we rejected out of the quarterly breaker here. Or monthly breaker, I'm sorry. There's a bearish imbalance as well. There's your rejection. Yeah, these relative equal lows do not look safe on TTD at $13. Sheesh. Software is dead, right? Isn't that what the some guy in the group, he said it like 75 times one day. We were just like, yeah, is software dead? I think software is dead. But yeah, so that's TTD. Scary out here. There's a lot of charts that are like app. All right, let's see. App got smoked, right? Oh my gosh. App yearly fair value gap at $200 is insane. Dare I say it? I mean, let's see. X live 220. All right. Let's see. This is pretty ballsy. This is a yearly fair value gap at $200. Could we get that? That would be so insane. Technically, you can make the argument that we can bounce here. You would have to close the quarterly above 428.99. Let's see if anything from the smaller time frames would even imply that. Monthly, okay. Your monthly's not too bad. Yeah, I think the yearly might be a reach, but it might not. I think short term, you could bounce here for sure. Here, right? There's a lot of confluence in this area. I wonder if you create this monthly bearish fair value gap here over the next 7 days, and then you get into that imbalance, and then from there, that's like showtime. I'm kind of hands off, because if you look at this from like a drawn out wider lens, a rejection from that point, yeah, it's kind of scary. So, but yeah, shorter term, I wouldn't be surprised if you do end up bouncing, because there is quite a few higher time frame levels. Weekly, there's no weekly bearish imbalance for a little bit here. We've already rejected that bearish level. Where do we bounce from, though? We didn't even tag this breaker. Ugh. This chart is kind of a mess, I'm not gonna lie. That's a rejection right there. Ugh. I wonder if you don't bounce until here. That's where the weekly breaker comes into play, and that's where this bullish imbalance is as well. Oh man, this one's scary. this one's scary too. That yearly is terrifying. Oh my gosh. Yikes. All right, well, we'll see. All right, I'll look at iron for you. I still kind of like you, hot cocoa. Okay, so we're in the process of forming yearly. Don't matter. Let's see. Yeah, so we tagged this in the overnight. Now, one thing that I usually would prefer to paint it on TradingView, right? This happened in the overnight session with earnings. You got that 28, but you didn't get it during our TradingView hours. I hate when this happens. I could show you examples of where it's mattered. I can show you examples of where it doesn't matter, right? Tesla did the same thing, got into that overnight quarterly imbalance, and took off. Never painted on here. And then I could show you others where they come back and get it. So Iron did get into that imbalance and breaker in the overnight session. Let's see if there's any urgency yet. Not quite. No. Not quite. I mean, just from this look, I understand it got to the 20 in the overnight session. From this look here, it looks like 33 is kind of hollering. Let's see. Iron here from a weekly. Weekly relative equal lows to get you into the imbalance. I understand it did it in the overnight, but it's not painting on trading view, which makes it horrible. You look here as well. You have no bullish imbalance. No urgency to move higher from this point. You do have relative equal highs, but preferably, honestly, you don't have any bullish levels here. I would prefer it to just go and get back in that quarterly, to be fair. Let's just see any other time frame if there's anything here. Like, nah, there's not even a 4-hour imbalance here. Let's see. Yeah, there's no imbalance here either. I think Iron's going to go lower. Get into that quarterly imbalance. Now, I think that would be fantastic if you got this again. Like, for like a long-term idea. Like, this has lines up with your quarterly, lines up with your yearly. I think that would be wonderful. But I think it's there's no imbalances underneath it right now until here. So that's where I want it. Yeah, I already did SPY in the beginning. Bro, this guy drives me crazy. Alright, we'll look at Oracle. Enjoy it, Peter. This is your last time. Okay, Oracle, nothing has changed at all. Okay, so still quarterly imbalance. Nothing has changed at all. So we're going to keep talking about it over and over again. Like, I don't even, I just don't know. I don't know, man. It's just, you're kind of just throwing darts and hoping to be right. I mean, what was your idea for the whole thing in the first place? Like, sometimes I wish I never even bring up names, because then I get all the bag holders for those names that join in, and now they ask me. It's like, you know what I mean? Like, I that's the one thing about, like, tweeting out things that I like and stuff. It's just like, because then you get, like, it's like that GameStop scenario. You tweet GameStop, all the GameStop people follow you, and then they ask you questions about it. It's like, bro, I ain't answering your GameStop questions. It's the same thing with this. It's like, bro, I tweeted Oracle once. Now this guy won't leave me alone about it. So yeah, nothing has changed with Oracle. We're still inside the monthly imbalances. Nothing has changed. Okay? Is that good? Melly. But I will say all these charts look horrible. Alright, Melly. Melly, another one. Terrifying. No quarterly imbalances. Insight. Nothing. Terrifying. Oh my gosh. Terrifying. You don't have it. Oh, you do have a yearly. Okay, so there's a yearly on Melly at 1708. Let's see if there's any alignment anywhere. Yeah, there is. There's a quarterly volume imbalance. That's okay at least. There's relative equal lows here. I think this one goes lower too. I mean, honestly, like, from a higher time frame perspective, I think it's pretty hard to find something. Like, again, I don't know if it's necessarily going to be this big move down, but a lot of these are extremely uncomfortable, and this would just be another one of those. I don't really think this looks good. Look at all those relative equal lows. It's scary. Scary. So, that's Melly. SE. If I'm not mistaken, SE is close. I remember this is the Bay Trader. Bay Trader talked about this one. So you have a yearly fair value gap coming up at $99. That's still obviously a little bit lower, but SE, yep, you have relative equal lows. I think those get swept. And then I have some confluence at around $89. You have the quarterly imbalance, quarterly breaker, and that yearly fair value gap. So I have an alert there. That would be ideal for me to give it a shot. But yeah, at least this one has an imbalance. A lot of these other ones don't have imbalances, so that is really, really scary. Yeah, I know. I'm just going through more and more of these charts, and I'm just like, yikes. This is scary. These look scary. Void G. All right, yeah, we'll look at that one. All right, let's see. Sorry, I think you tweeted that one before, and I missed it. Okay, so Void G, relatively new. Let's see. Okay. Nothing much from higher time frames right now. Let's see, smaller. Okay, you have a monthly volume imbalance. I think it's very important to close above 26.76. If you close below that, you create a bearish order block. That's not great. You do have relative equal highs above at 39.16, so that's not bad. Let's see if anything is showing you some urgency here. Not quite, no. Nah, no bullish imbalances here either. And you are coming up into a weekly bearish imbalance at about 29.69. What does that 29.69 do? Not much. Yeah, this one's see, look, here's the thing. If this, let's just say for example, this was a bullish imbalance, I would be looking at this completely differently, knowing that we have relative equal highs. But as an outsider, there's really no structural guide for me right now that makes sense. And what I mean by that is there's no imbalance where I can have my stop loss set at the low of the candle that created it. So for me to buy here, it's like where does it go wrong that it makes sense? Because I think the problem here would be, I would probably be, a little bit, I would like to manage my risk. It would probably be at this low, but you sweep relative equal lows on the weekly, you could very well bounce after that liquidity, right? So like there's no imbalance here that's going to offer me any like real insight, and that's I think problematic. So I'm not really a fan just based on that structure. It's really not too clean. So we did SPY, yeah. Yeah. So anyways, yeah, I think that's it for tonight. So yeah, business as usual. We'll be back for weekly prep on Sunday night. We'll prepare. We'll get going. I think this was necessary. I think I needed to look at some of these charts. It's really eye opening. So anyways, that's all I got. Hopefully this was insightful. If you haven't already, please like and share the stream. I got to get my my numbers. My engagement is in the gutter from when I was away. I don't know why, but I got to get the numbers up. So as always, if you like and share my stuff, I really appreciate it. I do. Trying to get the word out, share the message. There's a lot of people on X that would never do something like this, where they just share opinions based on actual analysis and not just kind of shoot from the hip and hope they're right. This is all the same stuff I'm showing you is how I go through every thought process for every trade that I take. So all right, anyways guys, I will catch you all later. Have a nice weekend. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions.